Welcome to this presentation of an easy way to spot Forex strategy number 4 signals. This is a specialist trading weekly Forex lesson for the week ending October 28th, 2011. Now in today's presentation I'm going to introduce you to a brand new tool which will make it extremely simple and extremely easy to spot Forex strategy number 4 signals, either for buys or for sells. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you performance results with this new tool looking at strategy number 4 signals. But please remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's Forex lesson. Alright, before we begin, let's review strategy number 4. Remember, strategy number 4 is a 5-bar pattern recognition strategy. So we're not really using a lot of indicators and a lot of advanced ways in which to spot this strategy. We're really looking at a pattern recognition strategy. So we're looking for the signal within the bars. So you have to know how the strategy and the process unfolds and how to spot this particular pattern. Now this pattern works in any time frame, in any market, and in any direction, but it's best suited for intraday and swing trading when you're applying it to the Forex markets. The average trade is going to last anywhere from 3 to 10 bars. And the reason we say bars and not time, such as minutes or hours, is because you can virtually use this in any time frame. So if you're looking at an hourly time frame, it'll last anywhere from 3 to 10 hours. If you're looking at a daily time frame, 3 to 10 days. But if you're looking at a 15-minute time frame, it'll be 3 to 10, 15-minute bars, okay? Now, our edge here is consistency. We're not going to tell you that each and every signal will work or be profitable, but we really feel there is a certain consistency to all of our strategies, including strategy number 4, and we're going to give you some tips today to increase that consistency. All right. So as we said, let's look at this week's strategy number 4 signals, and the title of this presentation was an easy way to spot the signals, and the way in which we do that is with our new add-on. This is a specific new feature that we have for NinjaTrader users. This is an add-on, a tool that you can apply to NinjaTrader that will produce buy and sell signals whenever it meets the qualifications and the requirements of this 5-bar pattern. Remember, this is specifically for NinjaTrader users, but it's a great tool. Now, looking at the euro-dollar here, we're looking at a 4-hour chart of the euro-dollar going back roughly to the 18th prior week before, but going into this week, and you see all the buy signals that were produced using strategy number 4. If we want to go and look at the Swiss franc on a hourly time frame, a 60-minute time frame, we look and see that on the 24th, 25th, and going into the 26th, we had some really nice sell signals. And you see how this add-on will produce for you and show you exactly where the pattern recognition is spotted and then produce an arrow for you. Makes it that much more simple. If we're looking at tick bars, as we suggested for those people who like to trade the Forex intraday, here's a 1,000 tick bar chart of the Australian dollar. And as you can see, we had some really nice signals this past week from the 26th all the way up to the 28th, or I should say 27th, on the upside, and all the different buy signals that were produced with strategy number 4. As well, you could apply this add-on tool looking to go short. Here's a 1,000 tick bar chart of the Canadian dollar. Once again, we had a really strong downtrend, and look at all the signals to go short that were produced using strategy number 4. Now, as your instructor and as your teacher, I ultimately want you to understand this process. I want you to understand what is behind searching for strategy number 4 buy and sell signals. But once you really understand the process, it'll make it that much easier, especially if you're trading intraday, to just really look and see something unfolding in real time and have an arrow be produced for you. But I want to share with you some tips for high probability trading of strategy number 4. You know, it's not just enough to get an up arrow or a down arrow and just simply take the signal. There, as we said, not every trade is going to be a profitable one, but there are some high probability environments for you to take the trade. That way you can discern and decide for yourself which trades and which signals to take. All right, tip number 1. Only trade in the direction of a very steep moving average slope. In other words, we want to see that there's some real strength behind the momentum of this particular direction of this trend. We don't want to see this kind of flat line in the particular bar chart, whatever time frame we're looking at. We want to see either a really steep up move in the moving average or a very steep down move in the moving average. Okay, this will give us a high probability signal to be in sync with the trend. Now as we look here, we have the 1,000 tick chart once again of the Australian dollar, and as you can see we have a nice strong uptrend, a nice slope to the upside, and so we're only going to be taking these buy signals. Now as you see right here, the arrows produced a sell signal, and it was a valid sell signal using strategy number 4, but because we are counter trend to the steep upward slope of the moving average, you would not have taken that signal, okay? And it was a good thing you didn't, because look what happened. The very next trade was a buy signal. You would have been stopped out, and it was better just to be in sync with the trend. So this is one of the best tips we can really give to our students, especially the beginning students, is always trade with the trend, but always look for a nice steep upward or downward sloping trend, and only take those signals that are in sync with that particular trend. Now this, as I said, this was a valid sell signal. It met all the rules and was a valid signal to go short, but it was counter trend to the upward slope, so this is what we would not take. This is what we're advising you. Tip number 1. Here's a hourly chart of the dollar yen. Now as you can see, we have a rather strong downward slope, and we're making some nice sell moves here. As you can see, we have 3 really nice shorting moves, and right here, what did we have? We had a buy arrow. Okay, now it meets all the qualifications, meet the requirements of an actual valid buy signal, but it's going counter trend to the nice downward slope of the moving average. So we really wouldn't want to take that. We would only want to take a buy signal if the dollar yen was having a nice upward slope. But since we're in the downward slope, we would simply bypass that signal and wait for something in sync with the downward slope, such as this trade, and you could have had a nice move to the downside. All right, that's tip number 1. Now tip number 2, only take signals that are closest to or at least touching the moving average. So we want to see the moving average having a nice slope, either upwards or downwards, and then we want to see signals that are produced either very close to or at least touching the moving average. These are higher probability signals. Now I know you're going to be seeing some very nice trades that are away from the moving average. This is not to say that you won't get some really nice trades that are away or further away from the moving average, but in the beginning, at least, if you're a beginning member to specialist trading in the Forex course, take the signals that are closest to the moving average, or at least touching the moving average would be even better. All right, so here's a 30-minute chart of the Canadian dollar this past week on the 26th going into the 27th. As we see, we had a nice downward sloping trend in the moving average, and we had a signal produced to go short, a down arrow that was touching, the bar was touching the moving average. So this was a high probability signal to take. Why? Because it gave us that much more room to the downside. Now as you can see later on the 27th, we produced 2 more signals to go short, but they really weren't as profitable because they were further away from the downward sloping trend. So you'd like to get somewhere around here or even touching the moving average to actually take the signal. Now to the upside, we have a 4-hour chart of the euro dollar. We have a nice upward sloping trend in the moving average, and as you can see, most of the signals are touching, as you can tell here, they're touching the moving average. This one's away, but not that far, but we have one that's very close in touching. This was the best signal. So if you wanted to, you can only take the signals, since many signals are produced with this particular strategy, you can only say, I'm only going to take the signals where the bar is actually touching or intersecting the moving average line. This will give me more room to the upside if we're having a buy signal. Whereas this one was a little bit away, and it wasn't as fruitful as the other ones that are actually touching. So that's tip number 2. All right, so let's recap here. Remember, the add-on is for Ninja traders only, but it's an easy way to spot strategy number 4 signals and trades. Okay, we gave you 2 tips here. The first tip is look for a nice downward or upward slope. If you have a nice downward slope, only take signals that are in sync with that downward slope. If you have a nice upward slope, only take signals with the up arrows that are in sync with that upward slope. Okay, and then tip number 2, try and take the signals that are as close as possible to the moving average. If they're touching, even better. These are the 2 tips that will give you high probability trades for trading strategy number 4, regardless of what time frame, regardless of what direction. But as we always say, the best thing is to learn the strategy. I just do not want to produce an add-on that gives you up and down arrows and you just blindly take signals. Remember, my goal is to teach you how to trade with the specialist edge. We mainly provide this for beginning students so they can understand the process and see how it's unfolding in real time, so they see and have verification of a signal that's being produced and generated, okay? But the best way is to learn the strategy and understand the rules entirely. This way, the up and down arrows will give you verification and see if you've learned things in the proper perspective. But once you really feel that you do understand the process, then paper trade. We don't want you just jumping in, feet first. Paper trade for a week, 2 weeks, even a month if you have to. Our edge here is consistency. As you just saw in trades from this past week, there is a certain edge of consistency to all these signals, but we are not going to promise you that they will all be 100% profitable. There are some trades that will lose from time to time. So we're trying to give you this consistency and then provide you with tips to give you higher edge, a higher probability for success. Now, if you have any questions concerning what I went over today or anything about the add-on for NinjaTrader users, please contact me at stephenprimo@specialisttrading.com. In closing, I ask that you please take one last look at our disclaimer. I showed you a lot of performance results using this new add-on that we've created for you users, as well as some performance results using strategy number 4 signals. But please remember that we can in no way guarantee that any of these results will be repeated in the future. Thank you so much for watching this presentation this week. Remember, if you have any questions, please contact me or my associate, Brett, at brettm@specialisttrading.com. He can answer any questions you may have concerning that NinjaTrader add-on for strategy number 4. Thank you so much once again. Have a great weekend, and we shall see you right back here next week. Bye-bye.